Welcome to the Personal Finance Podcast for Doctors with Meena Shriram and Chanda Verma. This podcast aims to simplify all aspects of personal finance and help you make smart and informed choices about money so that you can live happier and stress-free lives. Today's episode is brought to you by Meena Shriram, who is a financial coach and heads the doctor practice at MFA, the only company in India having a dedicated practice for doctors. Over the last 12 years, Meena Shriram has interacted with more than 3,000 doctors and understands the finer nuances of a doctor's financial life.
Hi, I'm Meena Shriram, financial coach and associate director with MFA. Today, I'll be talking on this topic, 7 steps of financial planning, where we will discuss the first step of financial planning, which is cash flow planning. Before I share on cash flow planning, let me take a minute to explain on what is financial planning. Financial planning is any decision that you take with money is financial planning. So here the important aspect is how do you take these decisions? So it is very important for you to take smart and informed decisions with your money. Actually, in life, we all have our decision-making framework. Yeah. So similarly, even for money or even to take your financial decisions, you have a framework. And this framework is called the 7 steps of financial planning. Yeah. So you can see that these steps are the foundation of a plan. And they are the strong pillars on which the entire plan is built up. We all know that for any structure to be very robust, the foundation has to be really strong. So similarly, if your financial plan is not built on these 7 steps, then you have not done a financial plan. Because financial planning is a very holistic, detailed, comprehensive, customized kind of a process. And I have observed that doctors often mix investment planning with financial planning. Now, what is investment planning? Investment planning is taking decisions with your surplus money that is there in your bank account. Investment planning, I would compare it like this, that if you have a stomachache or a headache, like if I have a stomachache or headache, at times I go to the chemist and say, please give me a medicine. Na? And he says, okay, kya chahiye aapko? I said, I have a headache, and he gives me a medicine for headache. But if you have a major problem, then you will go to a doctor. The doctor will analyze, understand, and then he will recommend what is best suited in terms of the treatment. So similarly, financial plan is like going to a doctor who will understand your situation and then suggest you the investment vehicle that is more suited for your situation. Yeah. So today we are going to discuss on the first pillar of the financial plan, which is cash flow planning. So what is cash flow planning? Yeah. So the meaning of this thing is there in the words itself. Cash means incomes that are coming to your family, flow or all the expenses that's happening. Now, what I'm going to do is that I'm going to go deeper into it to understand what are the income heads, what are the expenses head, and we are going to go deeper to understand. I would request if you can take a paper and pen and you can write down and understand for your family what are the incomes that are that's coming in, what are the expenses that are happening, and what is the ultimate savings that you're doing on a monthly basis. So let's go deeper into this topic and let's understand what all comes under the income heads. So under the income heads, what comes is that professional income. If you are salaried with a hospital, then salary will come in. In some hospitals, you are given certain allowances. And in some hospitals, I've seen you get bonuses on a regular basis, which can be either 3 quarterly or 6 monthly. Then from your investments, you get certain dividends that you can write it down. If you're getting rent from any of your properties, that you can write down. And you can do this for all your family members, for you, for your spouse, for your kids, for your HF, any member of the family getting income, you can basically write down the income for all of them. Yeah. This will give you an idea on a monthly basis, what is the income that you're getting at a family level. Now let's move on to the expense part of it. Under expenses, there are 2 types of expenses, mandatory expenses and the variable expense. Under mandatory expenses, what all comes in is your EMIs. All your EMIs come under mandatory expense. your insurance premiums, your professional tax, your kids' education, your society maintenance, and if you're paying rent to anyone, then that comes under the mandatory expense. Mandatory expense also is, you can say that it helps you understand that if your income for any reason is fluctuating or for any reason is not going to come in future, then what is that mandatory expense for your family that you need to take care of it? It also helps you give that idea. Now I move on to the variable expenses. Under variable expense, what all comes in? Your taxes that you pay on a quarterly basis, all your living expense, which is food, groceries, transportation, driver salary, your helper salaries, your clothing, medical care, utilities, auto maintenance, household repairs, white good repairs, all these things come under variable expenses. Now, other than this, there are three other expenses which we put it under the voluntary expense category. They are the entertainment, vacation, charity, donations that you make, and gifting that happens during special occasions. So, income minus all these expenses will give you an idea how much are you saving on a monthly basis. Now, let's understand this with an example. So, for example, I've taken a doctor's case. So, Dr. Gupta, on a monthly level, he's earning an income of rupees 10 lakhs. His mandatory expenses, considering the EMI premiums and all the taxes and kids' education, is close to 5 lakhs. And his variable household expenses, which we call as ghar ka kharcha, is 2 lakhs. So, what is he left with? He's left with 3 lakhs. What he does with the surplus money is he routes it through an SIP route. Yeah, because that helps him be more disciplined. And let's make a guess. What is the corpus that Dr. Gupta will have at the age of 65 if he starts investing from 45 till 65 for the coming 20 years? Let's make a guess. And I'll share the number with you. And I'm sure you're going to be really surprised because even when I did my planning, I was thoroughly surprised and amazed. And I found this absolutely magical. So Dr. Gupta will make a corpus of 29 crores. Yeah. And I know it is magical. And this is the magic of compounding. And that's why we call it the eighth wonder of the world. So here the corpus has grown at the rate of 12%. And just by doing a 3 lakh SIP from 45 to 65, this is the corpus that he's been able to build up. So we all have seen how the cash flow planning helps the family understand the income, expenses, and what they are saving. Now, let me summarize this and put it into, I would say, pointer format, which helps us understand the 5 important reasons why any family should do the cash flow planning. The first reason is it helps you get an understanding of the overall income. Yeah. And for a hospital owner, this is very, very important because then they can segregate the hospital income and the personal income. The second important reason is you get an idea of your mandatory expenses. So you know that if for any reason your income is going to get impacted, you know what are the mandatory expenses that you have to, plan for. The third reason is most of the family, whenever I have sat with them to do this variable expense exercise, they are not very sure. Even I was also not sure. It took me a month's time to actually put down my numbers and understand what exactly are my variable expenses. So once you understand what is your variable expense, because mandatory expense, everyone knows it, it's being accounted for. Variable is something which is a more hazy kind of a area. So once you understand, you exactly know how much are you saving on a monthly basis. Now the surprise element here, the fourth reason, the surprise element here is what is the corpus that's available on a monthly basis that you can channelize, because this is what in the initial years, this is what will help you build a sizable corpus for you. The fifth reason and the most important reason is the expenses will help you understand how you have to plan for a rainy day. What is the emergency corpus that you need to keep it aside? Yeah. So, and this activity will really help the hospital owner, doctors to a greater extent, because then it helps them segregate the personal finance and the hospital finance, and they can keep the hospital cash flow separately and the personal cash flow separately. So now we all have understood the importance of cash flow planning. And I would sincerely request each one of you to do this exercise. Actually, this exercise has to be done on a yearly basis. If any one of you need help in doing this exercise, please write to us on the email ID mentioned at the end of the podcast. We'll be more than happy to help you. Yeah. So let me end this podcast with this beautiful thought from Michael Dell, the founder and the CEO of Dell Technologies. We were always focused on a profit and loss statement, but cash flow was not a regularly discussed topic. It was as if we were driving along, watching only the speedometer, when in fact we were running out of gas. That's a lovely one. And thank you so much for patiently listening to my podcast. Take care. God bless you.
You were listening to the Personal Finance Podcast for Doctors with Meena Shriram and Chanda Verma. If you find this podcast relevant and interesting, do share it with other doctors as well. It will be great if you leave a review, share, like, and subscribe. You could also let us know if there is any specific topic that you would like us to cover. For any queries or help, you can get in touch with MFA's doctor practice team at 892-800-6140.